This is Nightly Business Report with Bill Griffith and Sue Herrera.
Watching Washington, a deal has been reached for a new NAFTA agreement, and that could have implications for trade negotiations with China.
Fighting fraud, a rare look inside a secret SEC room with the sole purpose of protecting individual investors.
Mall rats, why the digital teen generation may be the one that saves shopping centers. Those stories and much more tonight on Nightly Business Report for Tuesday, December 10th.
And we do bid you a good evening, everybody, and welcome. Once again, Wall Street's attention was on Washington because of new developments on trade, which, as you well know, has been a major focus for investors. Early in the day, there were reports that U.S. and Chinese trade negotiators were looking to delay the new round of tariffs set to take effect on Sunday. That was downplayed, though, by the White House. Then a little later, the administration and Democratic lawmakers said they had finally reached a deal to move forward on a trade agreement with Mexico and Canada, replacing the North American Free Trade Agreement with what is known as the USMCA, a milestone that was more than a year in the making. Kayla Tausche reports for us tonight from our nation's capital.
In Mexico City today, a feeling of deja vu. North American negotiators gathering to celebrate a revised USMCA. More than a year after leaders from the U.S., Mexico, and Canada signed the original NAFTA replacement. Since then, House Democrats and the White House have been negotiating behind closed doors to make the deal more enforceable and more palatable to organized labor.
This is a day we've all been working to.
House Speaker Nancy Pelosi announcing the agreement immediately after rolling out articles of impeachment and was asked if President Trump was unfit for office, why sign his signature deal?
I would say that we came a long way from what he originally proposed. And there are some people who said, why make it look like he has a victory? Well, we're declaring victory for the American worker.
The revised agreement has many business implications: regular compliance of the deal's labor, wage, and environmental provisions, and removing protections for brand name drugs against generics. For those reasons, the deal will have outsized impact on the auto and pharmaceutical industries. Tom Donahue, who leads the U.S. Chamber of Commerce, says the certainty, though, will be a good thing.
Nobody's going to be 100% happy, but if you look at jobs, economic growth, geopolitical common interest, and national safety, it's time to vote for this bill.
Pelosi said the House vote would take place next week. Senate Majority Leader Mitch McConnell raised doubts the Senate could vote before the impeachment trial in January. Even so, both sides of Pennsylvania Avenue are hailing this as a win for the U.S. economy. For Nightly Business Report, I'm Kayla Tausche in Washington.
The agreement between House Democrats and the White House on a new NAFTA deal came amid impeachment proceedings, which erased some early market gains. Today, House Democrats took an historic step, unveiling 2 articles of impeachment against President Donald Trump, charging him with abuse of power and obstruction of justice of Congress.
We do not take this action lightly, but we have taken an oath to defend the Constitution. And unlike President Trump, we understand that our duty, first and foremost, is to protect the Constitution and to protect the interests of the American people. That is why we must take this solemn step today.
But House Republicans disagree and defended the president.
So no, it is not difficult to defend this president because this president did nothing that's impeachable. It's hard to defend Democrats on how they're running this House and what they're doing inside their majority. That's the difficulty that I have.
Between the articles of impeachment and developments on trade, stocks barely budged. The Dow Jones Industrial Average fell 27 points to 27,881. The Nasdaq was down 5, and the S&P 500 slid 3.
So what should we make of the market's lack of reaction to the news out of Washington today? Joining us tonight, talk about that, Chris Konstantinos back with us, Chief Investment Strategist at Riverfront Investment Group. Chris, good to see you again. Welcome back.
Likewise, thanks for having me.
What do you make of that? I mean, no real response. When you consider that trade has been job one for Wall Street, and now they've got a deal on the new NAFTA here, but no response. What do you think?
Well, on NAFTA too, I'd say that the market had generally priced this in largely because, in Mexico and Canada, this had been agreed to for a long time. And I think that the market rightfully thought that this was one of the few places in American politics where a compromise could actually be reached at this point. And you heard it earlier in your program. Both sides are claiming victory. There was enough in it for both sides that they could get to a deal. And I think markets pretty accurately had sussed that out ahead of time, that was going to be the case. Now, is it a good thing for the global economy, for the U.S. economy, for the Mexican economy? In all of those fronts, I think the answer is yes. But I think that's been largely priced into the really strong market rally we've seen here in the last few months.
Do you think also the market is counting then, if we can reach this sort of agreement, perhaps it bodes well for trade agreements with China?
That's an excellent question. I'd like to say yes, but I think the answer is a little more complicated than that. Remember that NAFTA, on the face of it, Canada, Mexico, and the U.S. are all pretty close allies once you strip away some of the politics. We have a lot in common, including a continent. The trade deal between the U.S. and China, to me, is really it's a proxy war for something much deeper and more ideological. So I think that trade disputes with China are just a much more complicated situation, are likely to be with us a lot longer than the dispute over NAFTA too.
Well, let me go back to the new NAFTA. How should investors play this, if at all? How would you advise playing it? Who's the winner here that you can invest in?
Sure. Well, I'm one of those people that feels that global trade with lack of restrictions or barriers tends to be a win-win-win for everyone. Because as you reduce those trade frictions from an economic perspective, generally speaking, that's a positive contributor to economic growth. So the easy answer here is I think it's good for global stocks. I think it's great for U.S. multinationals, particularly some of those in more cyclical industries, which have been somewhat left out of the stock market rally of the last 5 to 7 years. It's also good, I think, for at the margin for emerging markets, of which obviously Mexico is a part of that index. And this, I think, relieves a pretty big headwind for the Mexican market. And also for Canada, it's positive. For all three nations, I view it as a win-win.
All right, very good. Chris Konstantinos with the Riverfront Investment Group. Again, Chris, thanks for joining us tonight.
My pleasure.
Also in Washington, House Speaker Pelosi said there will not be a government shutdown. She expects that lawmakers will be able to fund the federal government into next year. The deadline to pass the spending bills is December 20th.
To the economy now, and a new report that said that worker productivity fell by the most in nearly 4 years in the third quarter. According to the Labor Department, non-farm productivity, which measures hourly output per worker, fell at a 0.2% rate. It also showed that growth in the unit labor costs was not as strong as initially thought, suggesting that inflation does remain tame. And a separate report showed that a rise in confidence among small business owners who say that they are investing, hiring, and increasing worker pay.
It was day one of a two-day meeting of Federal Reserve policymakers. Markets widely expect the central bank to hold interest rates steady when they make the announcement tomorrow. And investors will be looking for any hints about what the Fed might do next year. So we asked Steve Leisman to survey the experts.
Like a bear in the winter, Fed officials look about to descend into hibernation. 100% of respondents to the December CNBC Fed survey see no change in rates, not only at the Fed's meeting this week, but all the way out to June 2020. Even then, just 48% of the 43 respondents, they include fund managers, strategists, and economists, are forecasting a cut. But the averages mask a big underlying debate about the outlook for growth that depends, among other things, on what happens with the trade war. While the averages see 2% growth in 2020, some see it rising as high as 3%, and some see the economy contracting by 0.5 point. Protectionism and global economic weakness are far and away the biggest threats that respondents see facing the U.S. economic expansion. Kathy Bastianek at Oxford Economics writes, the risks to the outlook for economic growth and inflation are still tilted to the downside, and the door to future rate cuts remains open. But Mike England, chief economist at Axiom Economics, writes, the U.S. economy is ending 2019 with faster GDP, productivity, and hours worked growth, and lower inflation than was expected at the start of the year. The same is likely to be true in 2020. Meanwhile, 67% believe that holiday spending this year will be above average, and the chance of recession in the next year fell to 26% from 34% in the prior survey. And that's probably what it would take to awaken the Fed to action. Absent an unexpected downturn in the economy or runaway growth that sparks inflation, look for the Fed to be hibernating through the winter and maybe even into the summer. For Nightly Business Report, I'm Steve Leisman.
Time to take a look at some of today's upgrades and downgrades. All downgrades tonight, as a matter of fact. Netflix downgraded to underperform from hold at Needham. The analyst says that the video streaming giant is at risk of losing millions of U.S. subscribers next year due to increased competition. The firm has no price target on that stock. Separately, by the way, Netflix said today that so far more than 26 million subscribers have watched director Martin Scorsese's motion picture The Irishman, which was financed by Netflix. The company expects that number to grow to about 40 million viewers in the first 28 days after its release. Stock fell about 3% today to $293.12. JP Morgan was downgraded to market perform from outperform at Keefe, Bruyette & Woods. The analyst cited the stock's valuation following a 37% gain for that stock so far this year. Price target $135. The stock closed just under that price at $134.50.
CSX was downgraded to neutral from buy at Citi. The analyst cites headwinds to earning growth next year. Price target is $75. The stock fell 1 cent to $70.40. McCormick was downgraded to sell from neutral at Goldman Sachs. The analyst cites the stock's valuation after outperforming its peers over the past 2 years. The price target is $140. Shares fell a fraction to $171.36.
Still ahead, mall rats, they're back, and they could save shopping centers while creating opportunities for investors. A bit of positive news for Boeing today. The aerospace company said that its November orders showed some demand for the troubled 737 MAX, but it wasn't all good. As Phil LeBeau reports, Boeing's commercial airplane business is on track for its worst year in more than a decade.
For the first time since regulators grounded the 737 MAX last March, Boeing has booked sizable orders for the troubled plane. In November, the company had 2 orders for a total of 30 737 MAXes. That helped Boeing's commercial airplane business post a slight gain in orders last month, though the order book is still negative for the year. But the bigger issue for Boeing is the drop in deliveries this year. At 345, the aviation giant is on pace for its fewest deliveries since 2008. That's because the company has been barred from delivering MAX models until they are recertified by the FAA. While Boeing is targeting recertification by the end of the year, the head of the FAA says he won't commit to a time frame for declaring the MAX safe, so it may not be cleared to fly until mid or late January. FAA Administrator Steve Dixon will be testifying on Capitol Hill about how his agency has handled the MAX. The hearing is likely to raise more questions than answers, and it's unlikely to answer the most important question: when the MAX will fly again. Phil LeBeau, Nightly Business Report, Washington.
Every investor wants to be protected from fraud, but very rarely do we get a look inside the SEC's enforcement center and a secret room where information is collected and protected. That is until now. Bob Pisani takes us on a tour.
A lot of people have been to the SEC, but almost no one has ever been in here. This is the forensics laboratory for the SEC. This is the room where the SEC conducts investigations into cell phones and computers that they have seized. This is a gigantic room. It's about 4,000 square feet, and it's completely lined in copper. Look at the copper on the ceiling on all 4 sides. That's to prevent radio frequencies from coming in, attempting to wipe the data off of the phones. These are computers that are used to analyze the data that they extract from the phones and the computers. It's amazing the information that can be retrieved. These are phones that have been broken or thrown into a river, yet the data can still be extracted. There's even an audio investigation room where investigators can remove extraneous noises from cell phone conversations and even identify people using voice print matching.
The air conditioner must be turned off.
Much of this technology was not even available 5 to 10 years ago.
Technology is getting sophisticated on both sides.
SEC Chairman Jay Clayton has made protecting investors from fraudsters and scammers a top priority. He has a simple message to those scammers.
I want bad actors to know that we're looking at for them. We're going to find them.
For Nightly Business Report, I'm Bob Pisani at SEC headquarters in Washington.
Google's acquisition of Fitbit may be facing some scrutiny. That's where we begin tonight's market focus. According to reports, the $2 billion purchase will be reviewed by the Department of Justice. The Federal Trade Commission also wants the authority to investigate this deal. The concern is that owning Fitbit would give Alphabet's Google division access to even more private customer data. Shares fell slightly to $1342.89 today. ExxonMobil has won a legal victory in a long-running climate change fraud case. The New York Attorney General had argued that the company downplayed the financial risks that it faced from possible climate regulation. But the judge hearing the case ruled that the AG failed to prove that. The judge, though, did not excuse the company from any accountability for global warming. ExxonMobil hailed the ruling and said that the trial stemmed from a baseless investigation. The stock fell a fraction today to $69.06. AutoZone reported better than expected earnings, and it blew past revenue estimates, marking 5 straight quarters of double-digit growth for the company. Their commercial sales division. The auto parts retailer also said that gross margins are improving right now, and that set the stock up nearly 7% to $12.50 even.
A disappointing quarter for designer brands. The shoe retailer, formerly known as DSW, reported quarterly earnings that missed analysts' expectations. The company cut its outlook for the year and said it expects 2019 comparable sales growth to be flat compared with its previous guidance of low single-digit growth. Shares dropped 16% to $14.23. There are reports tonight that New York Life Insurance is negotiating with Cigna to acquire its non-health benefits unit. According to the Wall Street Journal, a deal could be valued at about $6 billion. Potential buyers also include MetLife and Sun Life Financial. Shares of Cigna fell, so did MetLife, but shares of Sun Life were higher in today's session. And late today, discount retailer Ollie's reported better than expected earnings and revenue. The company also said its interim CEO, a company veteran, will take over the role on a permanent basis. The stock rose sharply in initial after-hours trading after rising a fraction in the regular session to $60.30. GameStop cut its outlook following worse than expected third quarter results. The video game retailer reported a quarterly loss. Expectations had been for a profit. The CEO blamed an unprecedented decline in gaming console sales as consumers wait to buy the next generation of gaming hardware. The stock dropped in initial after-hours trading after rising in the regular session to close at $6.51.
It is no secret that the nation's malls are ailing right now. Most have been experimenting with various ways to get customers in the doors. And now there's a new strategy, and it has a lot to do with teenagers. Diana Olick is in Philadelphia tonight for us.
If millennials killed malls, teenagers are going to revive them. That according to new research from CBRE. And according to major REITs like Preet, which just opened this $400 million project, Fashion District, in downtown Philadelphia. CBRE says 81% of teens prefer shopping in stores, and Gen Z's spending increased to $143 billion this year. Teens also influence $460 billion in spending.
They are huge fans of what's known as click and collect, meaning they click online and they like to pick it up in the store so they can get the tangible experience, they can get the social experience, and then the key is that they are buying more.
So teen foot traffic is the new rent. Fashion District has one of only 3 pop-up Candytopias in the nation. It's basically an amusement park on a sugar rush with a marshmallow pit.
It also has several Instagrammable art installations, a bowling alley, movie theater, and of course, teen apparel stores.
We've done a number of redevelopments over the past 3 to 5 years, and we're seeing upticks in our traffic in the mid to high single digits. So, yes, but that's not to suggest that every mall's a winner. That would be foolish to say right now. I mean, people have said that 40% of the malls in this country are obsolete, and I've sold off 50% of the malls that I don't want to own.
Preet is investing nearly $500 million in new development, and other major REITs are investing even more. hoping to change the whole concept of a mall and see explosive new growth. For Nightly Business Report, I'm Diana Olick in Philadelphia.
So which are some of the real estate investment trusts that are helping to change the whole mall concept? Alex Fitzgerald, manager of the consumer retail practice at A.T. Kearney, joins us to discuss this. Welcome, Alex. Nice to have you with us tonight.
Thank you for having me.
So you say that the mall is not dead, it's just evolving, and Diana gave us some instances of that, but who's on the forefront of transforming these malls?
Yeah, so, we see names like Simon and Brookfield. It's really those that are trying these new experiential offerings aimed at the younger, evolving consumer.
Do you buy the notion? I have to say, I'm a bit skeptical about this notion that teenagers are going to go back to the malls for their shopping experience. I mean, it's all about online, and we know that the Target and Walmart like to have people shop online and then pick up in the store. But are teenagers going to go to the malls for that shopping experience necessarily?
Yeah, so this is a great piece and actually a common misconception. So what we're seeing, and actually A.T. Kearney consumer research supports this as well, is it's less about digital or in-store and more about the seamless experience between the two. So you're seeing a lot of the click and collect gain traction. Maybe the purchases are happening online, but actually the store is playing a more important role. Actually, Gen Zs are showing that they have a preference to stores more than millennials did. So, there is some truth to the resurgence of stores, but it's not just stores, it's digital and store together.
And do you buy the notion that once the teen, or the consumer for that matter, gets to the mall to pick up whatever they've clicked on, that they actually do spend more?
I do. So, and I think this is, as the evidence supports this, the data supports it, but also my personal experience supports this. Nothing like the impulse buy once you're actually in the store. And the key is really for the retailers to be curating those great, irresistible purchases that are easy to find and really seamless to actually purchase once the consumers are in the store and are tempted to browse and buy.
We should probably emphasize again, you were saying that you felt like Simon Properties and Brookfield were the two real estate investment trusts that maybe are on the forefront of all this right now, yes?
Yeah, and I would say that there's a number of interesting experiments happening right now, and that's exactly what they are, and I think should be, right? So it's, what are those sort of asset-light investments that can be made in order to try to test and learn through these consumers? What are they reacting to, and how can we expose them to more of that?
I still want to know what a marshmallow pit is, by the way.
Don't we all?
We'll have to go to the mall.
I guess.
Alex Fitzgerald, thanks so much for joining us, Alex. Appreciate it.
Thank you.
Coming up, solid gold. A famous watch is up for auction, and you will not believe how much it could fetch. Here's a look at what to watch for tomorrow. As we mentioned, Federal Reserve policymakers will decide on interest rates and hold a press conference to address monetary policy and the economy. The Consumer Price Index will tell investors if inflation pressures are building in the economy, and the head of the FAA will testify in front of a House panel on the certification of the 737 MAX. That is what to watch for on Wednesday.
Finally tonight, one of the most famous watches in the sports world could become one of the most expensive ever auctioned. Robert Frank has the story of an iconic Rolex.
Jack Nicklaus's gold Rolex Day-Date comes up for auction tonight at a sale held by Phillips in association with Box & Russo. Watch experts say it could become the most expensive watch ever sold at auction if it can surpass the $17.8 million that Paul Newman's Rolex fetched in 2017. Now, Nicklaus's watch has an almost mythical status among watch collectors and golf fans.
And this was worth a lot more than I am.
For more than 50 years, it was the only watch that Nicklaus ever wore. It was on his wrist when he received 12 of his 18 major championship presentations. And aside from when he was actually playing, Almost every photograph of the Golden Bear includes his golden rollie, which he got as a gift from Rolex in 1967.
I didn't play golf with the watch on, but it came on as soon as I came off the golf course. My watch and wallet came back onto me. So every time I'm with a trophy, every time I travel, I've got a picture with me with the watch. And it was part of me.
All the proceeds will go to his charity, the Nicholas Children's Healthcare Foundation. Nicholas said he hopes his favorite watch will help buy health care for countless kids who can't afford it.
You know, to me, I miss this one, but I know it's going to do a lot more good than being on my wrist.
The collectible and secondhand watch market is expected to top $16 billion this year as the auction houses and online marketplaces like Watchbox and Watchfinder attract a new breed of younger buyers. Also selling tonight will be Marlon Brando's stainless steel Rolex GMT Master, which he wore in Apocalypse Now. It is signed by Brando himself on the back, and bidding starts in the six figures. It's being sold by Brando's daughter, Petra Brando Fisher, who is also giving the proceeds to charity. For Nightly Business Report, I'm Robert Frank.
And we'll keep you posted on what they bring. Before we go, here's a look at the day's final numbers from Wall Street. The Dow fell 27 points to 27,881. The Nasdaq was down 5. S&P 500 slid 3. And that is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.